So here we go. It says, this was from Zero Hedge. I like Zero Hedge. People hate it, some of them. And, you're free to do whatever you want. But it says, this is, has the housing market bottomed? The surprising result from a little known market indicator. I always like this reminds me of the movie Dumb and Dumber, where it's like, so you're saying there's a chance. It may come as a bit of a shock to those who have been following the creeping freeze in housing transactions as the bid-ask spread grows to monstrous proportions, leading to a record crash in pending home sales. There you go. Okay. And collapse in U.S. home prices, especially on the West Coast. But even though mortgage rates ticked higher back to 6% in January, there's a growing speculation that the housing market has bottomed. Why? Because as Goldman Rich Porowski notes, bet you didn't know there were housing price futures. They bottomed in Q4 and have been rallying. Indeed, the housing composite index traded on the CME is up decidedly in the past month after hitting a 16-month low in November. Did you know that there was a housing futures? Like, how do you deliver, by the way, how do you deliver housing? I mean, do you understand like orange juice futures? I understand that. I think there's futures in all the metals, but I had no idea that there was a housing price futures composite. Anyway, why this surprising bounce? A big reason for the unexpected rebound may be a recent report from real estate company Redfin, which last Wednesday reported that the housing market has begun to recover from a trough in the second week of November, with buyers returning at a faster pace than sellers. The number of Redfin customers asking for first tours has improved by 17 percentage points from the November low, and the number of clients contacting. Now, Redfin is a weird deal because they never make money. I think they've made money one quarter out of their entire 20 some odd year existence. They have a different pricing model. I'm not going to kick Redfin. I like their research a lot, but I don't know that I don't believe that someone's reading Redfin and then trading housing stock futures. Furthermore, according to the report, Redfin agents to begin the home buying process has improved by 13 points. I've seen more homes go under contract this month in the entire fourth quarter. Angela Langone, a San Jose, California real estate agent, said in the report. Among notable market moves, Redfin points to mortgage applications, which are up 28% from November, as the average 30-year fixed mortgage has dropped 6.1 to 6.15% from its peak of 7.08% in November. Okay. The biggest decline since 2009. Pending home sales rose 3% in December from November. But see, I'm in St. Louis, and my market is different. And I'm telling you, it's not like this. Among notable, preliminary data on the share of Redfin agents offers facing bidding wars points to small uptakes in the Seattle and Tampa markets this month. However, since this is not even a trend, expected to take some time before bidding wars nationally show an upward trend. It says bidding wars are back in Seattle. Local Redfin agent said one of our Issaquah listings got 12 offers and under contract for $155,000 over the $1.4 million list price. The buyer waived every contingency, handed over $300,000 of earnest money, and is letting the seller stay for free for 2 months after closing. Another home in Seattle's popular Ballard neighborhood was recently delisted after sitting on the market for over 3 months. The seller relisted it last week and it went pending in under a day. I mean, like, listen to me, buyers. If you don't want a market where there's multiple offers on properties, when you hear that there's multiple offers, just say no. And you say, well, I can't do that because every house is going to be sold. No, you can. You can either wait it out, which sucks, I agree, or just put in offers where you're comfortable with the price and be done with it. Those are the two things to do. So Eric Ocello, Redfin's team manager in Tampa, has seen 3 modest single-family homes priced around $300,000 wind up in bidding wars in Central Florida this month, with 16, 17, and 23 competing offers, respectively. You crazy? By the way, my new Rodecaster has a big soundboard, and I intend to use it. I'm not using it right now because I don't understand how to use it. Like, I haven't learned. And I did get the computer fixed today, so it's possible that I'll be having time for that. I also wanted to get my picture put in the set, and I didn't get that done today. So, shame on me. I was just checking the chat. Nobody's there. But while one can accuse Redfin of bias, after all, the company recently laid off some 13% of its employees due to the housing market collapse, so it's certainly interested in sparking some animal spirits in the sector. It is not alone in predicting a housing recovery. 1 week ago, Goldman's Jan Hatzus published the bank's housing outlook for 2023, in which he predicted that home sales appear to be set to turn higher. That's because mortgage purchase applications have averaged 9% above their October trough so far in January, and survey-based measures of purchasing intentions have rebounded sharply. And while Goldman expects that existing home sales could decline further, but will likely bottom in Q1 before rebounding modestly at year end. Now, I don't know the future. I have no idea. I don't know why I would I don't know. I don't understand this. Anyway, let's continue. It says, here are some more observations from the Goldman note. It says, we forecast that the housing starts will take longer to stabilize, declining to a trough pace of 1.25 million in 2023 Q4 versus 1.4 million in 2022 Q4, recovering next year. We expect completions to total 1.5 million this year, the most since 2007, which will help clear the backlog of homes under construction and contribute to a modest increase in the homeowner vacancy rate. We expect peak to trough decline in national home sale prices of roughly 6%, and for prices to stop declining around mid-year. Well, so this is February, so right around June, that should be the end of it. Based on this, it says, on a regional basis, we project larger declines across the Pacific Coast and Southwest regions, which have seen the largest increases in inventory on averages, more modest declines across the Mid-Atlantic and Midwest, which have maintained greater affordability over the last couple of years. So St. Louis is right here. They've got us going up, which would be ridiculous. Higher rates and lower home prices will increase the drag on the GDP growth from negative wealth effects and declining mortgage equity withdrawal, but we believe that the aggregate drag on GDP growth from the housing sector peaked in 2022 Q4 at 1.1 and will moderate to just 0.25 by 2023. We talked about this. The idea that housing contributed to, an economic expansion, and then it was dragging on the economy. I don't know if that's, I don't know. As it goes, if the housing price futures market and Goldman is right on pricing in a housing trough, then the consequences could confound markets. On one hand, stabilization in housing will likely make any coming recession less severe. On the other, since housing is the primary channel by which the Fed can slow down the economy, any failure to cripple this key U.S. asset could mean that Powell will be stuck in a higher for longer mode for well longer than the market expects. As a remainder, as the following Morgan Stanley chart shows, consensus is that the Fed is about 8 months away from its first rate cut, which will probably be followed by about 4.5 25-point rate cuts. I don't know. Like, is it the Fed's job to fix the economy, or is it the Fed's job to fix inflation? Like, which takes precedent? I don't believe this, what I'm reading. I'm just telling you. I mean, I see that it's rosy and good news. The issue to me is we've got record high credit card debt. We have record low savings in the country. And then we have high employment. How can you have, how can this continue? I mean, the people that are being laid off are the people that can't afford their things as it is. At some point, are going to be like, I don't even care if I work because I'm so far in debt. It doesn't matter, I guess.